We're talking about mortgage rates, and the million-dollar question, are interest rates for mortgages coming down again? Maybe you're on the sidelines just waiting to buy a house, or maybe you have that uncle that's always telling you rates are going to be 2% by the end of the year, or maybe you're just curious of where rates will be and when they will be the cheapest. In this video, we'll be discussing the mortgage interest rates and what the outlook looks for them and where they are going. As we know, interest rates have been extremely low in the past, like record low. In fact, mortgage rates between 2020 and 2021 were the lowest in history. And if you were able to get a mortgage then I would say congratulations to you, but not everyone is so lucky. So we need to understand one major thing about mortgage rates. Mortgage rates are directly related, or pretty closely related, to the Fed rate. And the Fed is making borrowing costs more expensive because inflation was out of control and they need to make the money supply smaller. But that's kind of besides the point. But to combat this, they have been raising the Fed rate. And they have been consistently raising the Fed rate since March of 2022. And ever since they have been doing this, the mortgage rates have been getting more and more expensive, peaking out around 7% in October. And just a year earlier, in October of 2021, the 30-year rate fixed mortgage was 3.1%. So I know when you get a loan, you think of your mortgage or interest rates as how much interest you're going to be paying to the bank. And if you have a number like 7%, you're going to be paying more interest over the course of your loan. And this is totally true, but it's an addition to something else. And it's addition to buying power. People's buying power when mortgage rates are super high are extremely affected. Consider when mortgage rates were around 3%. People could afford homes at $300,000 can now only afford $220,000 with a 7% interest rate. That's just 1 year difference. I just wanted to use this to demonstrate that mortgage rates bring more pain than just interest. Okay, so now in order to understand where mortgage rates are going, we need to talk about the Federal Reserve rate. Like I said, this is the rate to borrow money. Banks will use this, but on top of this, they need to charge more in order to make a profit. This is a business for them. So the Fed rate is currently sitting between 4.75% and 5%. And their next meeting is in March 21st, and they had a recent report that came out that said some members are expecting to pause rates while some members are expecting rate increases. Personally, I'm willing to bet that there is at least one more hike, which would bring our interest rate to 5 to 5.25%. The Fed has been pretty vocal about doing whatever is necessary to keep inflation under control. So my guess is they will be aggressive and they will have one more hike ahead of us. The Fed will probably be monitoring any economic situations closely, and then they will change rates based off that. So for mortgage rates, I would expect them once again to go up and hang out. I read some reports for 2023 interest rate predictions for mortgages for big firms, and they were kind of all over the place, and some of them made no sense. So they had those between 5 and 8% by the end of the year, but I'm going to do a better explanation right here. So the answer that everyone's been waiting for is, what will the interest rates be? And I'm not going to give you in specific numbers, but I'm going to show you the trends that we can follow, and we can kind of make some assumptions based off of that. So since the Federal Reserve controls the interest rates, then we can use their Fed rate as a leading indicator of where the rates will go. So I want to take a look at this chart of where the Fed members' predictions for the Fed interest rates are going to be at by the end of various different years. These are not mortgage rates though, these are only a leading indicator. Remember, the banks will have to take profit on top of this. So the dots on this chart represent where the Fed thinks interest rates will be for the end of that year. Keep in mind, right now we're at 4.75%. So the bottom x-axis is our years, okay? Starting in 2023, going over to 2026, basically. A majority of members believe that we will end 2023 between 5 and 5.25%. And I agree with this. This really looks like there will be one more rate increase, and then most of the members believe we will stay there for the end of the year. But I do want to note that some members think that there will be more rate increases after this. So moving to 2024, this is where things start to spread out. Higher numbers could mean people believe that rates are going to hang out a while before starting to drop. Towards the end of 2024, most members think that rates are going to end the year between 4 and 4.25%. Then if we move to 2025, another split decision comes, and they think we're going to be ending the year between 2.75% and 3.25%. And they think beyond 2025, interest rates will kind of mellow out around 2.5%. And again, this is the Fed rate, not mortgages, so banks will still take their cut on top of this. But this shows us that we can expect mortgage rates to be cheapest, and that looks like it's not until 2025. So most likely this year, we're only going to see minimum mortgage rate changes, and we are only going to see minimum changes for the years to come. So we're probably just going to slowly decline for the next 3 or 4 years. So those 3 and 4% mortgage rates that sound super nice are most likely not coming anytime soon, or at least for the next couple years. Remember, when mortgage rates were at rock bottom at high 2% and low 3%, the Fed rate was 0%. And now the Fed's lowest expectation for a rate is 2.5% in 2026. So I want to give you my thoughts. Mortgage rates are probably going to stay up for a while, and it's going to be a you decision on what the right time is to buy a house. The rates will not be making any sudden changes or any big changes anytime soon, and will it be worth waiting 3 or more years just to see rates in the 4% again? Remember, you can always refinance if rates come down. Yes, if they come down. We never know what the future holds for us, so I wouldn't be buying a house expecting rates to come down, but if they do come down, then that can just be icing on the cake for you. So I really hope this video was helpful, and if you have any questions or just want to comment for the YouTube algorithm, I would really appreciate it. Also, a like goes a long way. Thanks for joining me. I hope I taught you something or you learned something, and I will see you in the next video.